Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Thursday, January 13th. Stocks on Wall Street opened slightly lower after some disappointing news from the labor market. 35,000 more Americans filed for first-time applications for unemployment benefits last week. That pushed the total number of jobless claims to 445,000, the highest level in 2 months. Economists had been expecting the number to fall. The Labor Department attributed the increase to administrative backlogs, saying the data can be volatile in the first few weeks of the year. However, the economic data wasn't all bad this morning. The Commerce Department reported that the U.S. trade deficit narrowed to $38.3 billion in November, following a 14% decrease in October. Economists had expected the trade gap to grow. Meanwhile, wholesale prices climbed 1.1% in December, largely due to a spike in gasoline costs. The increase in the Producer Price Index was the biggest since last January. But excluding energy and food costs, the core rate rose just 0.2%, in line with estimates. Right now, crude oil is dropping back from a 2-year high, but still trading close to $92 a barrel.
The economies of Europe are also in focus this morning after decisions on monetary policy and more bond auctions. As expected, both the European Central Bank and the Bank of England left their short-term interest rates unchanged at record lows. At his monthly news conference, ECB President Jean-Claude Trichet defended the central bank's response to the Eurozone debt crisis, saying the bond buying program to help struggling members is ongoing. But he added that he wants the EU's stabilization fund to be more flexible. The ECB decision comes after 2 more successful debt auctions today. Spain sold 3 billion euros in 5-year bonds, sending Spanish stocks and especially the country's banks sharply higher. Investors have been concerned about Spain's ability to pay back its debts, sending interest rates higher along with those in Portugal and Italy. Italy also sold government bonds today, following Portugal's successful auction yesterday. But now there are some indications that the sovereign debt crisis may be shifting to the U.S. Both Moody's Investor Service and Standard & Poor's warn that the government needs to correct its deteriorating fiscal situation or risk a downgrade of its credit rating.
One of the biggest stock movers in early trading is Marathon Oil. The energy company said it will split into 2 companies, spinning off its refinery business in order to focus on oil and gas exploration. Shares of Marathon are jumping 10% on the news. Another big winner this morning is Micron Technology, gaining nearly 5% right now. Stern AG boosted its rating on the chip maker to a buy, and Micron also got a stock upgrade from Robert Baird. Rivals EMC and ON Semiconductor also received buy ratings from different analysts. But Jefferies downgraded Texas Instrument and Xilinx. One tech stock posting big losses today is Infosys Technologies. The Indian software firm is dropping 6%, after posting weaker than expected quarterly results and offering a cautious forecast for the current quarter. After today's closing bell, we'll get an earnings report from Intel, followed by JP Morgan Chase tomorrow morning.
A few more stocks to keep an eye on today. AIG is gaining 2% after saying it will repay the government's massive bailout by Friday, giving private shareholders the right to buy the insurer's common stock. At its peak, the cost of rescuing AIG was more than $180 billion. Meanwhile, Deere & Company is rising more than 2% after JP Morgan upgraded the farm equipment maker to overweight. NYSE Euronext is also solidly higher. Goldman Sachs boosted its rating on the operator of the New York Stock Exchange and added the stock to its conviction buy list. On the other side of that coin, Goldman removed Cognizant Technology Solutions from the list, sending that stock down more than 1%. That's the latest from Weiss Research. Have a great trading day.